It's time now for Futures in Focus. Oil is set for the longest losing run since 2015 as the ongoing trade tensions between the U.S. and China unsettle investors. Let's bring in Alan Knuckman of Agora Financial at the CME. Alan, so how would you trade this?
Well, looking at the oil market, it has declined. We have not seen a $70 day for the whole month of August. So that is interesting in itself, that it's been essentially a straight down move with lower highs and lower lows each and every couple of sessions here. So what we've seen here this week is a dip. We're down about $1.50 for the week, but I would attribute a lot of this to the dollar. We just made some new one-year highs in the dollar, but let's pay attention here because we are, depending on how we finish today, in position for a new high with a lower weekly close, which could be the start of a dollar stall that would help out all commodity markets.
So at this point, do you see any bullish catalyst for oil?
Well, there's always potential bull catalysts, and there's always price shock potential is always in the cards for oil. Anything that happens around the world, any disruption, any geopolitical issues. So there's always potential there. We've essentially come back to the breakout. We broke out at 63 a couple months ago. Now we've come back to that. Let's see if that level holds. 66 had been an interesting point here in the last few sessions, and we're not that far away from it. So I think technically we're getting a little bit oversold. We want to see how the markets react on a bounce, but you alluded to China. I think the news this morning was the fact that, the U.S. is going to discuss sanctions against China if they buy oil from Iran. So it's more symbolic than anything else. Iran's oil goes to China, South Korea, and to India, and it doesn't have any impact here, but I think, these kind of things are the issues that can put in a little bit of risk premium back in an oil market that's had that subtracted for right now. Pay attention to the macro market. You've seen the stock market have a big reversal and bounce here yesterday, and we're actually positive on the week. So if we can make some new highs in the S&P, we're very close to doing that once again. That could be a positive tone for global growth and for the oil market.
But Alan, how do you account for the recent increase in stockpiles that we've seen here in the U.S. and what that's going to do to the sentiment in the market surrounding oil?
Well, it had been pretty much a straight down move in that oil inventory. So we've been, drawdown, drawdown, drawdown. So we've seen a bit of firmness here recently. There are issues in America. Yes, we continue to produce more, but as far as the, getting it out of getting it. Distribution, that can be a bottleneck issue sometimes. Also, we're seeing, and I don't think we talk about this often enough, you saw that the numbers were raised for global demand. That's going to be, I think, the issue that we don't talk about enough because of global growth and for expanding economies. Yes, emerging markets had a tough time in their currencies here in the last couple of days, but I'm looking at that being a short-term phenomenon, and I don't think there's any major overhang with this Turkey situation.
All right, Alan, real quickly, can you talk to me a little bit about metals? Because, we've had really an awful week here, particularly with a lot of the industrial and base metals.
Yeah, it's been an awful month. It's been an awful year. And again, it's very much correlated to the dollar. There's much more of a correlation to the dollar being up and the metals being straight down than we've seen in crude oil. Crude oil has some internals that have some signs of strength, whereas the metals are straight down. At some point, they're going to offer some value. But for right now, there's been just a direct correlation. Until the dollar stops going up, you're going to see the metals continue to decline. So I think if you can look 6 months, 9 months, a year out, I think that's particular sector may have some value in it. If you can look at the XME, the ETF that tracks the metal and miners markets, I think it's very overdone, and I think that particular sector could make a comeback as time goes on, as the dollar stops going higher.